Hi and good evening to all our viewers that is joining us today via the FB Live. We are happy and we hope that you are doing good and awesome today. We truly appreciate your time, that you took your time off from your busy schedule to join our webinar today. So please sit back, relax and enjoy our sharing later that is going to be presented by our speaker. Okay, before I invite our speaker, allow me to introduce some of MCM background for our FB viewers today. So MCM established since 2012 and MCM project presents in more than 10 global countries. We are also known as the PMC, which is the Project Management Consultancy, and also as advisory firm. We have a huge professional team at our back end to guide you. And to know further more, let us move to the next session, which is the GIC sign up. So if you are keen to know more about MCM GIC, you may sign up our GIC membership today by scanning the QR code that is available in your screen here. Okay, so it's either you can scan or you can follow the link that will be given by our PR on the comment box. So please join us today. Let us learn more on our today's topic, which is what is direct listing. So what is direct listing is one of the interesting topics that we're going to learn today by our speaker, Mr. Charles Gimbat. So Mr. Charles Gimbat is our MCM relationship executive. So to further explain, let me invite Mr. Charles Gimbat.
Thank you, Sim. Okay. Let's start this topic with this question. Would you agree, if you're an investor, you would eventually want to cash out your profit? And when you cash out, wouldn't you be interested to exit with the most profit? Yes, exactly. Most investor looks forward exiting with the most cash out profit, especially over the years when they already start to see their company share value have grown over time. But before investors can cash out and realize this profit, they need to find best buyers for their share. Where would that be? For one, is to put the share on the stock market. How? Through an exercise called listing exercise. And listing the company on a stock exchange. Traditionally, this listing exercise involves IPO, SPAC, RTO. IPO is the initial public offering. SPAC is special purpose acquired company, and RTO is reverse takeover. And of course, as for our topic today, through the process of DPO, direct public offer, which is also known as direct listing. So today we are going to learn a little bit more about listing through what we call direct listing. So welcome again to another MCM GIC webinar. For friends attending tonight from Zoom and also from FB, hopefully you have been keeping safe. I'm Charles. For a living, I'm an investor, serial entrepreneur, and an MCM GIC Global Investment Community member. Thank you again, MCM, for the trust, education, and investment opportunity to be financially free. The topic today should briefly introduce us to direct listing with some examples to better understand why these alternative listing are sometimes more preferred over traditional IPO. So I invite you to do some learning together with me. So to better understand direct listing, let's start with ownership of a company. Ownership in a company is represented by shares in that company. Private company shares are typically held by few people, among others, the early investor, the founders, and also the management team, and so on. And as it becomes public, company shares are held and can be traded in the general public through stock market or stock exchange. A private company becomes public once its shares are being listed on a stock exchange. In Malaysia, our stock exchange is KLSE, and in overseas, the New York Stock Exchange and also Nasdaq. As one of the alternatives to listing a private company is direct listing, it is only possible to do direct listing in New York Stock Exchange and Nasdaq. Direct listing is not allowed in our local Bursa Malaysia. Probably maybe in the near future, this trend will catch us on. And shares being public listed once in the public Bursa, once in the stock market, are then open for trading for new buyers to own and sellers to buy, and dispose of, providing liquidity for early investors to cash out eventually. So how, why, and what makes direct listing different? To go over this, let us compare with our more familiar IPO. So this is a comparison of IPO and direct listing. In direct listing, no new capital are raised. Only existing shares are being sold. So raising capital only happens in an IPO. New issues will be shared. However, the drawback will be dilution of shares. Compared to direct listing, there is no dilution of the share value. As far as cost is of concern, in direct listing, there is no underwriters. So one of the benefits having no underwriters, then it will cost lower, avoiding hefty fees for investment bankers, cost of roadshow, also none, and company do most of the regulatory submission in direct listing. As for IPO, the cost can be higher for a company because underwriters have to sell the stock and do large purchases. The drawback is stock will be sold at a discount. However, the benefit that most people see is that more regulatory compliance will be done by underwriters and seen as to protect potential investor and also public. In direct listing, there is no lockup period, so it will be beneficial to investor because it allows for shares to be freely sold to the public market and cash out even on day one at listing day itself. However, sometimes this may cause volatility, the price of going up and down. As for IPO, the lockup period can be up to few months, up to 180 days before shareholder can sell their share. It actually prevents oversupply and help to stabilize the price of the stock. So the benefit would be that price is seen as less volatile on listing IPO. The drawback is that the stock will be sold at discount. As for price, in direct listing, the price will be called a reference price. Retail and big investor competes on level playing field. So better advantage to retail players with no discounts for big investors. So the price for big investors and also retail investor will be the same. It's just like going for an auction. Whereas in an IPO, the IPO price is usually predetermined. And it's not a level playing field for retail, since price for committed investor, especially big investor, bought at bulk by large investor, usually at a discount. Retail investor have to wait at listing days at a supply and demand price, and this usually costs more. And as we see, of course, the purpose for direct listing is mainly to go listing is to increase liquidity for shareholder to cash out, whereas in an IPO, the purpose of the exercise is more on raising capital for expansion and funding. Now, having said that, let's look at some of the company that opted for direct listing. So these are some of the direct listing that has been happening the last few years, and also the valuation. Some of the companies that have took to direct listing includes Palantir in New York Stock Exchange at a market cap of 21 billion. This was in September 2020. Slack is a company also in New York Stock Exchange. This was in June 2019. Spotify at 30 billion, April 2018. The gaming company Roblox at 45 billion market cap, which was direct listed on the 10th of March 2021, and of course Coinbase on the 14th of April 2021, this year. So as you can see here, except for Coinbase, all the rest were put up into direct listing at the New York Stock Exchange. So let's have a look at one of the company, Spotify. Spotify, as we know, a lot of people know, you also know who Spotify is. It's a commercial music streaming. Its business model is subscription, and actually it was founded in 2006, and it has raised 2.1 billion, over 17 rounds of funding, over 51 investors. The reference price for Spotify actually was at $132, and it opened at a price of 165.90 cents per share in April 3rd, 2018. As you can see, Spotify today actually have a customer base of increasing customer base, continuously increasing customer base to 356 million monthly active users with 158 subscribers. It was listed at $132 per share, and today the price last week is at $250.38. So you can see that Spotify have gained almost like 100% from its listed price. And you can also say that this company has a lot more to grow in the future with its very huge monthly active user and also subscriber. So another company that we want to look at is Coinbase. Coinbase, as we know, is a cryptocurrency exchange that charges on every transaction its merchant, consumer, and trader transact on its platform. It was founded in 2012, and it raised a total of 547 million over 30 rounds of investment, over 59 investors. It went into direct listing on the 14th of April, and it opened at the listing reference price of 250, valuing as much as 65 billion that time, quite a huge number market capital, and closed on that day at $381, valuing at 86 billion. During its listing, the price of Coinbase went as high up as $428, giving a market cap of almost more than 100 billion. So this is quite a historic feat for Nasdaq, being a debut at Nasdaq, and for a full year today, we can see that the service now has more than 56 million users. By the end of 2020, it has more than 43 million users and 32 billion before that. And we see that the numbers are increasing. And we can see that also that revenue, although in 2019 there was a loss, but then again it was covered to a profit of 322 million in 2020, and with a revenue of 1.28 billion. So this is a huge number, and Coinbase actually took advantage of the rally or the prices of Bitcoin that went up as much as 63,000 in our money. So if we look at it, although Coinbase was being listed at the reference price of 250, and currently it went down to 223. So it's up to everyone as to whether, because sometimes prices can rebound. So we can also say this is a discount. When we see at this moment, a lot of institutional players are also coming in and also invest, not so much alone in Bitcoin, also in an exchange like Coinbase. So it's an opportunity for everybody. So Coinbase have come a long way. Direct listing have come a long way. In fact, it started its debut with Ben and Jerry, an ice cream company in 1984, and interestingly, Slack and also Roblox also took to direct listing. In fact, my son was surprised why I was researching on Roblox, because he used to play Roblox, a gaming company, and I believe some of its followers today have come of age and now most eligible to become investor themselves. So direct listing is being exposed to a new group of investor, a younger audience, setting, I believe, direct listing to be the next preferred alternative to IPO. I don't know, maybe only time will tell. Now is direct listing for everybody? Is it suitable for any form of company? Now, we have an article here which says that actually for direct listing to be successful, the company needs to have a strong reputation, widely known, a well-known brand, and with an easy business income model, not exactly in need of additional capital. So, like we have seen the example earlier on, two notable companies that have gone public through direct listing, Spotify and also Slack. Both companies we see and we know already have a strong reputation before going public. They were widely used, and their business model were easily understood. And these two things combined, increase the number of people interested in the company, because investors definitely, people like us also are more inclined to invest in companies that we are familiar beforehand and also we understand. So it's not for just any company, but especially good for those already actually have a big customer base, such as Spotify and also, in fact, Coinbase. So I hope with this short slide, we still have another two more final slides to go before we go for the question and answer. So I hope you have learned as much as well as me while researching for this. And then if you like to know more about similar topic other than direct listing, I invite you to subscribe to MCM YouTube channel. MCM has spent a lot of effort on the videos and especially making sense of what investment is all about. So even if you are already quite a seasoned person in investment, this is a good platform, a good channel to subscribe to, which is quite informative and full of new contents. So, in reference to what we discussed today, it's interesting to note that with direct listing, it gives us an understanding that there's a changing role of underwriters in underwriters and also shareholder going public these days. And today we can see also, and we can feel also the emergence of new generation of younger investor. Those people who used to play roadblocks are now eligible to become investor themselves. The role of internet and social media that provide ease of accessibility to the marketplace. And while in IPO, underwriters function as introducers to the market, we can see that in direct listing, investment advisor partner with a company, private company, to satisfy regulatory requirement to the market. Owners today takes on more significant role on promoting not only their share but also from their company through social media, engaging the public even from day one, even before they start their company. So all this because of the tool of technology. Now, at the same time, we can see that liquidity to shareholder in direct listing actually is advantageous to the earlier investor compared to in an IPO. Usually, the share are given as in discount and already diluted. So this interesting note that equal access in direct listing for buyers and sellers, regardless of whether they are big investor, also providing the same opportunity for men on the street. This transparent process somehow, as what is Coinbase CEO Brian Armstrong said, that direct listing was more true to the ethos of crypto. It lets the market set the price and democratize the process of going public to everybody. And just for an important note, although IPO previously is the only alternative for a company to raise capital, today we see that last December 22nd, the US Securities Exchange Commission announced that they will also allow company to raise capital through direct listing. So this is paving a new way to circumvent the traditional IPO process. So in reference to my question earlier in my first slide, we can conclude though there is no surefire formula which may be the best listing method. Clearly, direct listing is becoming another new alternative for investor to maximize, and of course, for investor to cash out investment profit. So we have to say that direct listing adds more to the diversity rather than, I would believe, the end of IPO. So more to come on direct listing in the future. So thank you again for both of you, both in Zoom and also FB. And hope you have learned something new today. And see you in the next webinar. So back to you, Sim. Thanks a lot.
Okay, thank you, Mr. Charles Kimbat, for the amazing sharing. I believe that our viewer that is joining us today truly understand the meaning behind of direct listing and learn more on how it works for the future. So thank you, Mr. Charles, again for the amazing sharing by you.